This is not breaking news. This is not a scandal. This is not about one country, one ship, or one decision made behind closed doors. This is about a system that has quietly decided what your money is worth for 50 years, and what happens when that system starts to fail. Somewhere far from cameras, far from elections, far from public debate, a routine process is being stress tested, not loudly, not suddenly, but deliberately. Nothing has collapsed yet. That's the danger, because the most powerful systems do not announce their breaking point. They signal it through small deviations, through workarounds, through enforcement where trust used to be enough. If this sounds abstract, stay with me, because this system doesn't live on trading floors or balance sheets alone. It reaches directly into interest rates, prices, jobs, and debt, into the quiet math of your daily life. If you want to understand what's coming, not after it happens, but before, keep watching. Because to see the failure, you have to stop looking at people and start looking at control. And that's where we go next. What actually controls this system is not ideology, not leadership, not elections, it's settlement. Who gets to decide which currency clears energy trades? Which payments move instantly? Which ones stall? Which accounts stay liquid? Which ones freeze? For decades, that control lived inside a single loop. Energy priced one way, payments cleared one way, reserves stored one way, debt financed one way. That loop didn't need constant policing. It ran because opting out was expensive, because alternatives existed, but never at scale, because the safest path was also the easiest. But control systems don't fail when someone attacks them. They fail when participants discover they can leave without collapsing. And that discovery doesn't look like rebellion. It looks like experimentation, like hedging, like quiet parallel rails built just in case. The moment a system requires force to maintain participation, it has already changed, not broken, changed. And once the rules shift from trust to enforcement, every actor starts recalculating. That recalculation is already underway. And it didn't start with confrontation. It started with normalization. That's the part most people missed. There was a time when this system felt invisible because it worked. Energy moved, payments cleared. Currencies held value. No one asked why. That was before the shift, not a collapse, a drift. Before, pricing energy in one currency felt natural. After, it felt optional. Before, holding reserves in one place felt safe. After, it felt concentrated, exposed. Before, sanctions were rare and surgical. After they became routine, predictable, normalized, that normalization is the danger. Because slow change doesn't trigger alarms. It rewires expectations. Countries didn't abandon the system. They hedged against it, quietly, incrementally. A small trade settled differently, a contract rewritten, a reserve adjusted by a few percentage points. Each decision made sense on its own. None looked revolutionary. But systems don't measure intent. They measure direction. And direction tells you when standard practice becomes legacy behavior. By the time that realization spreads, the system isn't failing. It's already being replaced, one workaround at a time. And that brings us to the first visible shock. Then something happened that looked dramatic. And because it looked dramatic, it was misunderstood. A ship was stopped, cargo identified, authority asserted. On the surface, it looked like enforcement working, rules applied, lines held, but this wasn't the story. It was the symptom, because the shock wasn't that one vessel could be intercepted. It was that interception had become necessary at all. For years, pressure had been applied quietly, through paperwork, through access, through financial friction. That pressure didn't stop movement. It rerouted it. Oil kept flowing, just differently, through unfamiliar channels, On ships that didn't advertise themselves, settled through systems that didn't ask permission, the interception was meant to send a message, and it did, but not the one intended. Because everyone watching understood the subtext, the old tools weren't enough anymore. If this were a stable system, it wouldn't need visible force to hold. If this were control, it wouldn't look like pursuit. And once enforcement becomes spectacle, the calculation changes. For everyone, if this interests you, stay with me. Because the real story isn't the seizure. It's what had already replaced compliance. And that's next. Here's what actually changed. When pressure increased, the system didn't resist. It adapted, not politically, mechanically. Energy didn't need permission to move. It needed transport, insurance, settlement, and buyers willing to accept risk. So those elements detached. Ships stopped broadcasting where they were. Ownership fragmented. Flags multiplied. Insurance went opaque. Payments avoided familiar rails. This wasn't chaos. It was optimization under constraint. The benefit flowed upward. Producers sold at a discount but kept revenue. Buyers secured supply without dependency. Intermediaries extracted margins for navigating risk. The cost flowed outward to transparency, to oversight, to the system that used to intermediate everything. And here's the critical detail. None of this required ideology. No declarations, no alliance, just incentives responding to pressure. Every successful workaround proved something dangerous. That exclusion wasn't absolute. That enforcement had blind spots. That alternatives didn't need to be perfect, only functional. Once that lesson spreads, it doesn't unlearn. The system still exists, but it's no longer the only path. And when control becomes optional, it stops being control. That realization triggered the next escalation. And that escalation didn't stay economic. Pressure increased. So did visibility. More ships moved quietly, more routes, bypassed familiar checkpoints, more transactions cleared where oversight couldn't reach. So the response changed. Not paperwork. Presence, interdiction replaced restriction. Boarding replaced blocking. Assets moved closer. Lines blurred. This wasn't theory anymore. It was physical. Steel in the water. Orders transmitted. Compliance enforced by proximity. But something else happened at the same time. The traffic didn't stop. It synchronized. Departures clustered. Routes diversified. Transfers accelerated. For every interruption, multiple exits. And then support appeared, not rhetorical, operational protection for movement, escorts, signals sent without words. That's when the equation shifted. Because once enforcement meets protection, pressure becomes confrontation. And confrontation doesn't test rules. It tests limits. Limits of reach, limits of endurance, limits of escalation before cost outweighs control. Those limits are not theoretical. They're being mapped in real time. And once limits are visible, every actor adjusts around them. That's the moment we're in now. And it doesn't stay contained. Here's where this reaches you. Not abstractly, not eventually, directly. When systems like this strain, they don't announce it with alarms. They pass the cost downstream. You see it in borrowing, in rates that stay higher longer than expected, in credit that tightens without explanation. You feel it when prices don't fall back the way they used to. When volatility becomes background noise, when uncertainty stops being episodic and becomes structural, none of this is framed as a consequence of enforcement or currency mechanics. It's framed as conditions, as inevitability. But it isn't inevitable. It's mechanical. When demand for safety shifts, when capital looks for exits instead of stability, the math changes for everyone. You didn't opt into that recalculation, but you're part of it. And if this feels distant, that's intentional. Systems work best when their effects feel impersonal. So pay attention now, before the adjustment becomes permanent, before the choice is narrow, because what's happening next doesn't stay offshore. It propagates, and the ripple doesn't stop at borders. Once this moves beyond one market, it stops being containable, because energy doesn't move locally. Finance doesn't settle nationally, and risk doesn't respect borders. What began as isolated adjustments synchronized. Trades cleared in unfamiliar currencies. Contracts rewritten outside legacy frameworks. Institutions connected to parallel rails, not as replacements, but as backups. Backups matter because backups become defaults under pressure. Shipping lanes adapted. Insurance pooled differently. Payment systems routed around points of control. None of this required coordination. It required observation. Each participant watched the same signals, interdictions, escorts, escalation, and they reached the same conclusion. Dependence is exposure. So diversification spread not ideologically, operationally. The system didn't fracture. It segmented multiple paths, multiple clearings, multiple settlements. That fragmentation doesn't cause immediate collapse. It causes uncertainty. And uncertainty is expensive. It widens spreads, raises risk premiums, slows decisions. Global systems can survive shocks. They struggle with ambiguity. And this is no longer a local problem. It's a distributed one, which means the next phase isn't about reaction. It's about trajectory. From here, the system doesn't choose a single outcome. It opens into possibilities. 3 paths. The first is adjustment, controlled change. Acceptance that dominance becomes influence, that one currency becomes one of several. That stability comes from participation, not enforcement. This path is quieter, less dramatic, politically difficult, but structurally survivable. The second path is erosion, not collapse, drift, more hedging, less commitment, higher costs absorbed gradually. Nothing breaks, but nothing works as efficiently as it used to. Privileges shrink, constraints multiply, choices narrow over time. The third path is rupture, misread signals, overreach, escalation where restraint was required. A confrontation miscalculates. A response hardens positions. Parallel systems decouple faster than expected. This path moves quickly. And once it starts, it doesn't wait for consensus. Which path emerges isn't determined by rivals alone. It's shaped by how power responds to limits. Whether it adapts to friction or tries to eliminate it, that decision hasn't been made yet. But the conditions are forming. And the final question isn't about markets. It's about what kind of control survives in a system that no longer needs permission. Nothing here resolves cleanly.